Good morning. It's Monday, August 12th, about 6 a.m. Central Time. The markets are beginning the week on a much calmer footing in comparison to last. Overnight, we've got gold futures up $9.5 at 24.82. September silver up 43 cents at 28.02. $28 kind of a big level. If you look at it, was old support. Now it should be new resistance. Let's see if the market can build some momentum above here. You do have copper futures up 6 cents at 4.05 and platinum futures up $14 at 9.44. So this week's market catalyst really going to begin on Wednesday when we get the new reading on inflation. The CPI is expected to raise 0.2% for both the headline and the core figure. The data will shed some light on the health of the U.S. economy and the outlook for the Federal Reserve's interest rate path. We have also seen the CBOE's volatility index has significantly declined from last week's peak. The August futures are now trading back below 20. So getting into some of the data and some of the readings that are coming out. Today, all we have is Cleveland Fed inflation expectations and the Federal Reserve's budget balance. Not really any market movers there. If you go to the CME's Fed Watch tool, which was widely watched all last week, remember last week at this time, it was like a 98% chance that the Fed will cut 50 basis points. Just an emergency cut was discussed, 50 basis points, nothing else was expected. Now, if you look fast forward 1 week, it's about 50-50, and it's actually 48.5% chance that the Fed will cut 50 basis points versus 51.5% chance that the Fed will only cut 25 basis points. So the markets are much calmer at the moment. Now, getting into some other things here, many of you put on a seasonal trade that started right around July 24th in the gold market, and we were expected to hold that position through August 13th. If you go to July 24th, we were trading right around that 24.40s, 24.45, and if you look at the average gain on the gold futures over that time period over the last 15 years, been about $41. So if you look at where we're at here today, gold futures trading at 24.83, and the start of this particular seasonal was 24.45. So it goes in line with the expectations. About a rise of that $40. Given all that volatility, I said that we'll take that. Now looking at some other markets here, crude oil futures up 90 cents. I think that gives really a great look to the continued recovery and the continued rising Middle East tensions here that I think that are fueling some of this recovery in the precious metals markets. Something I want to look at on the gold market, and you guys should really pull up a daily chart on it, is look at the higher lows. You go from June, you go to July. So what I generally do is I'll print off my charts over at the overnight session, and then I'll start to look at them and I'll start to measure and map some of the volatility, some of the things that we're looking at, some of the psychological levels. I think gold, $2,500 would naturally be psychological resistance again. I think if we capture $2,500, provided there's nothing else too wild in the markets, I think that some of the financial news networks will start picking up is gold making another run for all-time highs? Will most likely be the headline. But if you look at the June low, the July low, and the August low, you can see that they're all higher lows, and that's really important there. 2,500 again, psychological resistance. Your key level of support is really that 50-day moving average at 24.24, and then below that is going to be about 2,400 down to 23.92. You don't want to see the markets go below there. And then if you look at stochastics, they are rising, which is a nice signal, and the average true range is $41. The reason why I bring up average true range so much is that if you have a much longer term perspective on this market, from a risk management standpoint, you should know that gold futures should fluctuate about $41 in a day. So what a lot of traders will do is they'll take 2 times that number. So it would be $82. So like on a 10-ounce contract, $820. And that's where they would put their stop loss. They would know that if the market retraced that much, that there's probably some warning signs there. They wait for a breakout in the market, which is something that we're seeing right now. Market is breaking above, recapturing that bullish trend from a neutral trend. And then what they'll do is they'll put their stop losses there. For traders that have a much tighter time frame, they don't want to give this much wiggle room. What you could do is look at something like half the average true range. So something, say, $20, $20.50 is where you would put your stop loss in that place. Now getting into the silver market, silver looks really interesting. Remember, we identified that right around the 200-day moving average. We feel that that was an area of value on that market, and we saw a major bounce off there, and we're seeing a small continuation here today, up 43 cents. So we looked at a couple of things. Many of the people that are working with us picked up some October and some November call spreads. They were the 28, 28 and a half, and then the 29, 29 and a half. I think a logical way to do it with some of those call spreads now going into the money would be to try and sell the first call spread to pay for the second call spread and essentially have a free trade to some extent. I'm using that term loosely here. So then you'll hold that as your longer term call spread. It's just something to think about. And then on that silver market, you really don't want to see that sell or that retest back of the 200-day moving average. Now, I think a lot of it will come down to the U.S. equity markets. Remember, these markets are all somewhat interconnected. The S&P 500 has been down 4 straight weeks here, and it's its longest losing streak in almost a year. So we'll see if that market could build some momentum, start to turn around from here, and then help boost some of these other asset classes and some of the commodities. If you got any questions, you ever want to talk strategy, I help individual traders here put together a lot of different plans here, and then we start to implement these trades here in their futures trading accounts. You got any questions, give us a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.